What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll look at weekly chart of all of the indices, the VIX and Bitcoin after we got a very impulsive bear market relief rally. There's going to be a lot to pay attention to over the next couple of weeks, so first up let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright. So first up, looking at the SPX, we can see that we did get a very bullish week. But I do want to remind you from a zoomed out picture that we are currently in a downtrend after we did break out of that bull channel going all the way back to about April of this year. So now we need to zoom in and look at exactly what's going on in the current situation, and we could see we got a very bullish candle with a bullish tail at the bottom and closing at the high of the week. So that was a lot of buying pressure with very little selling. Now keep in mind, this is still considered just a bear market relief rally as long as we have lower highs and lower lows, because you don't want to be getting overly bullish in a downtrend. So while we do have another air pocket before we get to resistance right around 4,200, you will want to watch that level at 4,200 very closely. Remember that I always suggest following price action, which means you need to know your critical levels and then you need to watch how price action behaves at that level. So in a bearish situation, price action could get to 4,200 and then a lot of sellers could step into this market and start driving price lower. So you need to be watching price action very closely at that level. Now in a bullish scenario, we'll blast right through 4,200 because the bulls will be stronger than the bears, and then we'll be looking for a retest of the top of the channel right around 4,300. So watch these very critical resistance levels going into next week's trading at 4,200, and above that you'll be looking for 4,300. And if we get that bullish breakout above 4,300, then we'll start looking for the possibility that the bear market is ending and we could be going back into a bull phase. But I would not assume that is going to happen. Let the price action prove it, and by prove it I mean we need to see higher highs and higher lows. Remember that by definition a bear trend is lower highs and lower lows, which is currently what we're seeing. And if we're going into a bull trend, we need to start seeing higher highs and higher lows, and that will reverse the bear trend, and then we can go back into a bull trend. There's a lot of fancy names for patterns on charts like inverse head and shoulders and cup and handle patterns. But really, if you hammer down to what those are actually telling you, it is telling you that the stock market's price action is changing from lower highs and lower lows to higher highs and higher lows. So whether this looks like an inverse head and shoulders or a cup and handle or whatever other pattern you want to talk about, it is strictly just higher highs and higher lows. So if at any point on this weekly chart we start to get patterns of higher highs and higher lows and we start to see the bull showing some strength, then we can start to say possibly that the bear market is over. But even in the event that we start getting some type of bullish price action, it doesn't guarantee that we're out of the bear market, because every single bear market has counter trend relief rallies, and usually they are double-digit gains and they do look very bullish. So just be very cautious navigating this market and know these very critical levels on SPX at 4,200 and 4,300. You can see we did have this giant head and shoulders pattern below the neckline, and we are back above that neckline in just one swift week of price action. So this could be a little bit of a bear trap with the price action, so that is something we will want to pay attention to. Another thing to pay attention to is our support trend line down here right around 3,900, and as long as we are above 3,900, we are technically still in the bull market that started from the bottom of 2009. If we start to see price action slicing down through 3,900, it is very likely that we're going to that next leg lower at 3,700, and then below 3,700 we do have strong support right around 3,600. So 3,900 is by far the most critical support level in the near term, or you can look at this neckline which is currently sitting right around 4,000. So there is basically very critical support every 100 points lower from here. So that will be your critical support if you are bullish that you will want to pay attention to. But please remember that while the bears have the bear trend, they will not roll over and die easily. So they will be showing up at these critical resistance levels. So I don't expect to see the bulls getting an easy path through resistance. Now, one thing we will need to pay attention to is the fact that there is a lot of bearish sentiment, and there could be a lot of people trying to front run shorting this market and trying to short every single bullish candle, assuming it's going to be the next lower high. And that is a very rookie mistake. If you are trying to short this market, wait for some type of reversal in the price action and watch these critical resistance levels. If you start shorting at 4,200 and we blast right through there, and then we get all the way up to 4,300 and start building a bull flag, you will be wiggling around in your seat as you're holding short positions that are deteriorating and losing value over time, and that bull flag will likely just break out and go right back lower after you panic sell your short positions. So just be very cautious trying to short bullish candles, because this is a very bullish weekly candle on SPX, and this is way too early to start shorting blindly. So yes, we are in a downtrend, but you don't want to short strength, because every downtrend eventually ends and can go right back into an uptrend. And right now this is a very bullish candle, and last time we did see a bullish candle like that, we did get 2 weeks of follow through before we saw resistance and turned around and headed lower. So every bear market eventually comes to an end, and every time we make a new lower low, there's an increasing probability that we put in the bottom. And right now we have put in plenty of 52-week lows, so I would not be getting extremely bearish as we get to support levels. Wait for price action to break through, and then you'll be looking for that next leg lower. On the bear bull survey, you can see that we're back to extreme bearish sentiment, with over 53% of the people that are bearish and less than 20% of the people that are bullish. This goes hand in hand with the counter trend relief rally, that even if we're in a bear market, we are going to see counter trend relief rallies when everybody stacks up to the bear side and there's just way too many sellers with no buyers. Eventually this will go away and we will get more people that are bullish, and then we can continue lower in the bear market. Otherwise, we are going to see extreme sentiment punished and continue to get a very impulsive relief rally. So watch the bear bull survey closely, because looking out in the next 6 to 12 months, we are likely going to be at higher prices because we did get way too much bearish sentiment. Jumping over to the NASDAQ 100 weekly chart, we can see the same story as the SPX, breaking out of the bull trend and still in a bear trend. Now you can see on the NDX there is a huge air pocket before we get to resistance, which could take us all the way back up to 13,300. So keep in mind, if the NDX is going up another 600 points, that will help push the SPX higher as well, which could mean the SPX is going to blast right through 4,200 and likely get to 4,300. So watch the NDX very closely, because the tech sector could start to get a very impulsive rally, because we still do have a lot more upside until we get to resistance. You can also see that the NDX did bounce off of the support trend line that goes all the way back to the bull market that started at the bottom of 2009. So there will be a lot of support down here right around 11,600. So watch that very critical support and that critical resistance above. And if we break above 13,300, there is the possibility we go up to close the gap at 14,300, which is also going to be the top of our channel. So there could be a lot more upside in this bear market relief rally, and this bear market relief rally could always turn into a bull trend if we start to get higher lows after we get a pullback. So know these very critical levels and pay attention to the bullish breakthroughs. If we do get price action breaking through resistance, that is something you will want to pay very close attention to. And just like I said on the SPX, do not blindly short strength. When you're getting weekly candles closing at the high of the week and erasing a lot of bearish gains from the last 2 to 3 weeks, that is not something you want to ignore, because it is a sign of relative strength. And it is a sign that the bulls are starting to battle back and they're starting to get some small wins. And over time, small wins could turn into large gains, which could bring the bullish confidence back, and the buyers could come in off the sidelines, and we could see a lot of money coming back into this market. So try not to get overly bearish when you're seeing bullish candles, because the definition of following price action is having no bias and understanding that when you get a bullish candle, you instantly need to think it's possible that the bulls are coming back into this market, and that is not something you want to just ignore. So watch that very critical level, because we're very likely going to test it over the next week or two. And then if we get a rejection from that level, we will be looking for the possibility of a higher low before we put in the next lower low. And if we get the higher low and the bullish breakout, we need to instantly start thinking about the possibility that the bear market is over. But we don't want to make any assumptions. We want to wait for that price action and wait for that confirmation. That is the definition of it being a downtrend until it's not. So we cannot get bullish until we see some type of bullish development. And right now we just have one positive week that could turn into something bigger, or it could completely reverse and then head back lower yet again. On the Dow Jones weekly chart, we could see another very bullish candle closing at the high of the week and erasing the last 3 to 4 weeks of bearish gains in just one swift motion. So again, these are not candles you should be completely ignoring, but in the Dow Jones, we are going to be testing critical resistance as soon as Tuesday, and that critical resistance is right here, right around 33,272. That was the trading range that we broke down below, which did give us a target down here right around 30,000. So if we get rejected from resistance at 33,000, it is still possible this was just a lower high before the next lower low. So like I continue to tell you, we are not out of the bear market just yet. Now there is a lot more upside in the tech sector, but if the Dow Jones has had enough upside, it could start to reverse as soon as next week. Otherwise, you are going to see that bullish breakout above resistance and the Dow Jones will be back into that old trading range, which means we could come all the way back up to retest resistance right around 35,000, which is also the top of our downtrend channel. So we're looking for a bullish breakout above 35,000 with an early sign that we're getting a bullish breakthrough above 33,300. And if we get a rejection at this level, we will seriously be watching for the possibility of that next leg lower. So there is a lot to pay attention to and a lot of very critical price action going into the next couple of weeks. So know these critical levels and then let the price action do all the talking. On the Russell 2000 weekly chart, again, a very bullish candle closing at the high of the week. So you could see a very common theme that the bulls were out buying the dip in all of these indices and closing at a very positive close. And that is erasing a lot of bearish gains in just one swift motion. So in the Russell 2000, we clearly bounced off that price target at 1700, and it does look like we're heading back up to retest the breakdown, which is right around 1968. And if we get rejected from that resistance, it is still possible we head back lower and then eventually hit the price target at 1578 at a much later date. So a bullish breakout will be a breakthrough above 1968. And above that, it will be looking like the bear market could be ending and we could be heading back up to retest resistance at 2100. So you can see there's a pretty large air gap before we get to that resistance, which could imply that we have more upside before bears show up and try to drive prices lower. So watch price action very closely over the next couple of weeks and know these very critical levels. On the VIX, we had another week of the VIX getting crushed, and the VIX has now closed below 30 for 3 weeks in a row, and the next bullish development in the VIX will be a weekly close below 24 and then a weekly close below 20. You can see the VIX has been making higher lows, so we can't just say that volatility is out of this market while the VIX is above 20. So watch any of these support levels as a possibility for the VIX to get another spike, which could send us for that next leg lower in this bear market. A very obvious sign that we're going for a next leg lower would be the VIX spiking back above 30, so watch that level very closely. On Bitcoin, we're currently up about 1% with Bitcoin trading at 29,000, and so far the support level at 28,000 is still holding up. And if this level does break down, we are very likely heading down for the next leg lower with support at 20,000. However, I do think this zone from 25,000 to 28,000 will be very strong support. So I am looking for a retest of resistance right around 36 to 37,000 on a bounce off of this support zone. So if you start to see bullish price action breaking above about 31,000, you'll be looking for a very bullish impulse all the way back up to about 36 to 37,000, with the bullish breakout being a weekly close above 40,000. So know these very critical levels because Bitcoin is either going to break down and see a very quick waterfall wave of selling to 20,000, or we're going to get a very decent counter trend bullish impulse in Bitcoin in the very near future, just like we're seeing in the indices. On the ARKK ETF, there's not too much to update. We're still well below the support trend line, even though we are getting a lot of short covering in a rally in the short term. There is nothing bullish about this ETF until we get all the way back above at least 47 and 52. So we are not getting bullish until we see that bullish price action. So jumping back over the S&P 500, these are going to be a very critical next couple of weeks. So know these very critical resistance and support levels that I gave you and let the price action do all of the talking from there. Remember that price action is king, and if price action is telling you something, you want to pay close attention because nothing else matters in the market except what the price action is telling you. If you're seeing bullish price action, you instantly need to get more bullish. But do remember that we are still in a downtrend, so we will need to see a bullish breakthrough and a development of higher highs and higher lows before we become bullish. So in the short term, you should still be viewing this as a temporary relief rally. And yes, it will be looking bullish, but if it doesn't form higher highs and higher lows, it is just a bear market relief rally and nothing more. Stay patient, stay disciplined, and use great risk management, and you should do just fine in this market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.